Did you know that millions of Americans are getting significantly bigger tax refunds this year, and many of them have no idea why? If you filed your taxes recently and you're sitting there wondering where your money is or why your neighbor's refund seems much larger than usual, you are absolutely not alone. Today, we're breaking down everything you need to know about the 2026 IRS tax refund update, the good news, the frustrating delays, and exactly what you can do about it. If that sounds helpful, go ahead and hit that like button, subscribe so you never miss an update like this, and drop a comment below telling us whether your refund has arrived yet. Now, let's get into it. So let's start with the good news, because honestly, after everything we've all been through in recent years, we could all use some. This tax season, the average refund has jumped by somewhere between 10 and 14% compared to this same time last year. That might not sound like a lot in percentage terms, but when you translate that into real dollars sitting in your bank account, we're talking about a meaningful difference for many households. For some families, that could mean an extra few $100s. For others, it might be even more. And the reason behind this increase is actually a fascinating story that started back in the summer of 2025. In July of last year, a sweeping piece of legislation called the One Big Beautiful Bill Act, often referred to simply as the OBBBA, was signed into law. Now, tax law changes can sometimes feel abstract and distant, like they happen in a world far removed from our kitchen tables and grocery bills. But this particular law has some very real, very tangible effects that are showing up directly in people's refunds right now. Let's walk through what changed, because understanding this will help you make sense of your own return. First and foremost, the standard deduction got a significant boost. For married couples filing jointly, the standard deduction is now $32,200. For single filers, it's $16,100. Now, if you've been filing taxes for a few decades, and many of you watching have certainly done that, you know that a higher standard deduction means less of your income is subject to tax. That's money that stays in your pocket rather than going to Washington. It's a straightforward and meaningful change for millions of people. But here's where it gets especially interesting for our viewers who are 65 and older, and that is a large and wonderful part of our community here. On top of the standard deduction increase, individuals aged 65 and above now qualify for an additional $6,000 deduction. Let that sink in for a moment. An extra $6,000 removed from your taxable income. For a retired couple, both over 65, that adds up quickly, and it's one of the key reasons so many seniors are seeing noticeably larger refunds this season. If you're in that age group, this one change alone could be making a real difference in your return. Now, there were also some new deductions introduced that many people haven't heard about yet, and this is exactly the kind of information we love sharing here. For the first time, workers can deduct qualified tips up to $25,000. Overtime pay is also now deductible. And here's one that may surprise you, auto loan interest is now deductible as well. These are deductions that didn't exist in prior years, and because many employers and payroll systems hadn't adjusted their tax withholding to account for these new breaks, workers ended up having more taxes withheld throughout 2025 than they actually owed. The result? Larger refunds when they file. Think of it like overpaying your electric bill all year and then getting a big credit when they finally balance the books. That's essentially what happened here for millions of Americans. The child tax credit also expanded, rising to a maximum of $2,200 per child. While that's more relevant to younger families, it's worth knowing if you have adult children who are filing and might benefit from this information. Sometimes the most meaningful thing we can do is pass along helpful knowledge to the people we love. Now, let's have an honest conversation about the other side of this story, because it wouldn't be fair to only share the good news. Even though refunds are bigger this year, many people are waiting longer to receive them. And the reasons behind these delays are important to understand so you're not left feeling confused or anxious as you check your mailbox or bank account day after day. One of the most significant factors is something called the PATH Act. This is a federal law that has been on the books for a while now, and what it does is prohibit the IRS from releasing refunds for tax returns that include the Earned Income Tax Credit or the Additional Child Tax Credit until at least mid-February. This is a fraud prevention measure, and while it can feel frustrating to wait, it's designed to protect taxpayers. For the 2026 season, most of these held refunds began showing up in bank accounts around February 27th. So if you were in that group and you've been checking your account anxiously, your money may have just recently arrived or should be on its way very soon. There's another factor contributing to delays that is harder to talk about, but important to address honestly. The IRS has experienced a significant reduction in its workforce, somewhere between 27 and 30% fewer employees compared to prior years, largely due to budget cuts. Fewer staff members means fewer hands processing returns, fewer people answering phones, and more time needed to complete manual reviews. It's a reality that affects processing times across the board, and it's one of the reasons why getting through to someone at the IRS by phone has been particularly challenging this season. You are not imagining it. The system is genuinely more stretched than it has been in recent memory. The IRS has also implemented new and enhanced fraud prevention systems this year. These digital filters are designed to catch identity theft and fraudulent filings before money goes out the door, which is genuinely a good thing in a world where tax fraud has become increasingly sophisticated. However, the downside is that more legitimate returns are being flagged for manual review as these new systems are still being fine-tuned. If your return gets selected for additional verification, it doesn't necessarily mean anything is wrong, it may simply mean your return crossed a threshold in one of these new screening systems. The IRS will typically send you a notice if they need additional information from you, and it's important to respond promptly if you receive one. There's also a significant change regarding direct deposit failures that every single person filing electronically should know about. In previous years, if your direct deposit information was incorrect or your bank rejected the deposit for any reason, the IRS would simply mail you a paper check. That was a comfortable safety net many people didn't even know they were relying on. Starting in 2026, that's no longer the case. Now, if a direct deposit fails, the IRS freezes your refund for 30 days while they wait for you to log into your IRS online account and correct the banking information digitally. This is a meaningful change, and it means that a simple typo in your routing number could result in a month-long wait for your money. So if you haven't already, it's worth logging into your account at irs.gov to double-check that your banking details are accurate and up to date. Finally, it's worth mentioning that some state-level delays are also playing a role in the broader picture. States including Idaho, New York, and Oregon are experiencing their own processing slowdowns as their tax agencies work to update their software and systems to align with the new federal tax laws introduced by the OBBBA. Federal and state refunds are processed separately, so even if your federal refund arrives on time, your state refund may take a bit longer this year. A little extra patience there is likely warranted. As we wrap up the main content today, take a moment to think about where you stand with all of this. If you're expecting a refund and haven't received it yet, the tools at irs.gov, particularly the "Where's My Refund" tracker, are your best friend right now. If you're 65 or older and you filed your return without accounting for that new $6,000 senior deduction, it may be worth a conversation with a trusted tax professional to see if an amended return makes sense in your situation. And if you simply want to understand your money a little better this year, you've already taken the right step just by watching this far. Coming up next, we're going to bring everything together with a final summary and a few practical takeaways to leave you feeling confident and informed heading into the rest of this tax season, so stay right with us.